morning, good afternoon, good evening, whichever corner of the world you are, and welcome to the Global Market Review by myself, Dr. Musa, on Sunday, 19th Feb 2023. This is being recorded at 2 p.m. Indian Standard Time, GMT plus 5.5 hours. In this GMR, we have three GMRs, by the way. The GMR1 is on global equity indices, the GMR2 on Forex, Bullion, and Energy, and GMR3 on agriculture and industrial metals. In any of those GMRs, when we do them, if there are any interesting setups that we find particularly interesting, trading, investing opportunities, or some sort of an unusual signal which is on the chart, or there's some spectacular news around it, then we will talk about it if there is anything interesting. So in today's GMR, we're looking at Forex, Bullion, and Energy. And with that, let's jump in. Of course, if anyone has any inputs, feedback, or any collaboration ideas or proposals, we would love to hear from you. You have the information on how to contact us. It's +91, mobile number +91 93419 67573, or you can email us at askmusa@gmail.com. Right? As you can see, a little old school and not really much on social media at all. All right. So looking forward to any inputs after you watch this session. So with that, let's jump into the analysis of the topic today. As I said, Forex, Bullion, and Energy. This is not going to be a particularly comprehensive review of Forex or all the Forex currencies that are out there. Depending on where you look at the numbers, people will tell you that the US dollar pairs are USD, INR, USD, Pound, GBP, USD, Euro, USD, JPY, USD, Swiss franc, etc. Anything the USD one side of the pair or leg generally is 80-90% of all the contracts. So sometimes you do see some very interesting scenarios on some exotic currency pairs, but that's not what we are getting into today. Definitely something we may look at in the future Forex specific webinars. All right. So the DXY, as most of us know, is the dollar index that is universally tracked, right? And tells us the strength of the dollar per se, right? And at the outset, a good chart to look at or evaluate, because it gives perspective on probably how rest of the global currencies have performed. And also if there's anything specific interesting in the DXY, then we can extrapolate that to many of the other analyses that we would have on individual currency pairs. So the DXY, looking back, looking at the history, looking at now the monthly chart, top left, zooming out into as much data as is available. And this is from 1968 onwards, which is a good amount of time. The DXY, as you can see, the top green line was at a high of 163. And this was in March 1985, Feb 1985. So that was the peak strength of the dollar. Of course, considerably come down and has some very good support and zones, support and resistance at 81, at 104, and at 120 on the top side. What the DXY has done in the last many years specifically is been quite range bound between apologies, got a slight bit of a dry throat, between 89 on the lower side and 9900, just round it off, on the higher side, right? And did that sideways consolidation from 2015 onward. So almost a good 7-year consolidation. It effectively broke out of that consolidating phase in April 22, and then went on to make a peak of 112, and then come back to test that support zone now at 102 levels, and has bounced back up. This is on the monthly chart, remember that. So is it possible that now we are going to see the US dollar strengthening over the long period of time? As in, I say long period of time, for the next many months and perhaps the next few years. Quite possible with this breakout. If this breakout can hold and this test holds, then we are looking at that happening. With the global scenario as it is, it's all about geopolitics, etc., as we all know, especially when it comes to the US dollar strength. With what's happening in Russia, Ukraine, um, and China slowing down on economic front and focusing now on the domestic growth side. Russia not really being any significant player. The BRICS countries, of course, are making a lot of noise and talking about other countries joining the bloc. But nothing really seriously meaningful has come out in terms of um, knocking off the US dollar off the pedestal. We keep hearing stories about it, but nothing that has come close to it. Um, and with US remaining the global superpower for now, especially on the economic side and the currency side, quite possible that the US dollar will remain the world's favorite currency, especially as there's been this growing talk about we live in an era of polycrises, all happening simultaneously, and any one crisis could cascade and affect another crisis, and who knows how that pans out. Now, if you hold that view and you hold that theory, then in terms of which is the currency, reserve currency, safe currency that the rest of the world will run towards, well, it definitely remains the US dollar. So as you can see on the bottom left weekly chart, and on the top on the right side, you see the daily chart, very good uh, support that it took at 102 and then went back up to 103. So about a 2% rise in the US dollar. So the US dollar, well, after sort of weakening since September 22, but that's about 4 months now, is beginning to strengthen again. Whether it can break 105 and then go back and reclaim its higher levels, that's of course to be seen. But by the looks of it, on simply from the chartists' perspective, yeah, I would think that the probability is definitely on the US dollar strengthening in the coming weeks and months. And obviously, this will show up on the rest of the global currency pairs. So let's look at, let's say USD Euro. And you can see that very much along with how the US dollar strengthened, the Euro weakened and then strengthen again. So this is sort of an inverse chart that one has to really understand. So this was when the US dollar was strengthening, you could get more and more euros per US dollar. Went to a peak of about 1.04, went back to a low of 0.9, and then now we are at 0.93. Now, for those of us mostly exposed to the equity markets, if these look like small moves, well, certainly not. These are quite big moves as far as Forex goes. And we are talking about 12% move here from top to bottom, just in the USD Euro move. Now, of course, as the US dollar strengthens, this will go up again. And we could see the USD Euro back at parity at 1 or more. Who knows later this year, if especially if the Ukraine Russia thing spills over and it starts putting a much bigger strain than expected on the European Eurozone, there could be some interesting moves to be seen on the US dollar euro rate. Coming to the British pound. British pound, interesting. It's made a double bottom on the USD GBP level. and has bounced from there. So there are multiple factors at play. The British economy is the only economy seeing just almost got into recession, just a technicality. In the G7 countries, all the other G7 countries are showing some amount of economic growth, but not UK. So there is some interesting things to be said for that, with what the UK government and the Bank of England might do in the coming months, and I guess definitely this year, to try and see if the British economy can be kick-started again, especially after the disaster that Brexit is on the economic front. Um, if that is the case, then one of the things that the British government and the Bank of England would want to do is perhaps look at weakening the British pound to make the British economy more competitive. They might do that in various ways, and the levels to watch out for in the uh, charts, I think, would be looking at what happens to this zone that I'm marking out, and does the GBP stay inside this zone or break out on one side or the other, which is basically between zero point 0.8 on the lower side and 0.85 on the upper side per USD. If it breaks out, which is what I expect will happen, that means that the British pound becomes weaker by the day or by the month, and we'll have to then just see how this pans out. So interesting things on the British side to look forward to. And then looking at the USD JPY, so one of the interesting things that's happened, this is I think I had that graphic somewhere. I'm not sure where it is. So Japan had one of the biggest quarterly uh, deficits, export import deficits, which is huge, and that's further putting pressure on the Japanese economy. Of course, there is really no other way for the Japanese economy, or Japan for that matter, to survive in the global economic scheme of things, but to consistently keep the Japanese yen as weak as they can or should want to do that, because on the population front, they are depleting fast. On the productivity front, not much really happening. And on the global headwinds, well, there are other countries which are now sort of really catching up on various phases. So where does the Japanese strength in terms of making its economy competitive come from? They are a very, very insular nation, really don't want foreigners to come in, except come in as a tourist and then leave as soon as you're done. So immigration has really not happened. So there are some really big challenges for the Japanese economy, long-term chronic challenges, which they really haven't addressed. And the easier thing for them to do, as they have been, of course, like all humans do, is to just ignore the problem till you can't ignore it anymore. And in the meantime, try and do what you can, which is basically, keep the currency as competitive as possible. Having said that, there is a new governor for the Bank of Japan, an old academic who's been appointed, and there is some talk about whether the Japanese monetary policy will shift to a more conventional one, in the sense that instead of keeping, like, the interest rates have been kept at 0%, and then we're just pumping billions and trillions of Japanese yen into the Japanese economy, whether there could be a sort of pullback from that, and then you're going to see a more conventional approach to Japanese monetary policy, and whether you could actually have interest rates in Japan start to now increase, in which case it'll be really, really fascinating to see what's going on. But if you look at the USD JPY chart here, and I'm going back to the DXY chart here, you will see that more or less they are, just overlaps of each other, right? So right now, the Japanese yen really following whatever the US dollar is doing, in the sense that obviously the inverse of that, but nothing else. And the interesting story is in the USD GBP, which has multiple factors connecting to it. So depending on, what side of the equation you are you going to be an importer or an exporter, a tourist going in or somebody coming back? These have, very different implications for you. In terms of, we here in India, or I guess for many of the Gulf audience who want to send money to India, then the chart to look at is obviously the USD INR chart. And the USD INR chart has really, it's really interesting what the USD INR has done. We'll have a session exclusively on the USD INR, long-term, short-term discussions, economic scenarios, etc. But for now, just to keep it focused and simple, in September, August last year, 2022, the the INR was at 80 rupees to dollar. And then it broke out of this pattern, which almost textbook, ascending, almost textbook, not really. And it broke out with a really massive, gap here, as you can see, very interesting. And then it just went on from 80 to 83 in, about a month, right? Or almost just less than a month, 80 to 83. And then has basically been in that zone of 80 to 83. And as you can see, not really completely reflecting the DXY. I'm going to put the DXY here, right? So that's the DXY. You're looking at it in the same timeline. Uh, I'm not changing anything with the timeline. And you can see that the USD INR definitely is not mirroring the DXY. And there are some local situations here at play. And there are many. You've had the thing with crude oil, global crude oil prices going up. You've had India trade deficits going up. Of course, lots of good stuff happening. But one of the things about the currency charts is that it, at the end of the day, it really reflects the consensus view that the market has about a country's economy and where it is likely headed in the future. And if you look at this, well, it's definitely the case that the India rupee is getting weaker, uh, if not by the month, then definitely by the quarter, and has really no substantial strengthening that has happened. In spite of the USD DXY, getting weaker, it's not like the USD, the INR became anything significantly stronger in the process, right? So there is this issue that one needs to keep in mind, and the level to track is really where we are almost right now. So we are at 82.73 right now. 83.25 is the level to track on the USD INR. And if that breaks, then I think 84 and 85 is not very, very far off on the USD INR in the coming weeks, and definitely in the coming months. Remember, this is the election year 2024. We have general elections in India. Quite likely that the government is going to start announcing some sort of freebies and giveaways and populist measures in the coming weeks and months as the election draws closer. So watch out for that, and watch out for that then in turn impacting um the USD INR rate. And by the looks of it, by the charts and by what you're seeing on the screen, we are probably looking at the USD INR becoming 84, 85 in the next 2 to 6 months is my view, right? So those of you who want to send rupees to India, or send dollars to India, can obviously gets converted to rupees here. You may want to think about holding off for a while and perhaps looking at a better rate. And those of us who want to send money out of India, then, well, you obviously better do it now rather than wait later and get fewer dollars or euros or whatever your foreign exchange favorite currency is, right? Um, right. GBPINR, right? So that's something to also look at. There are a lot of Indians who are abroad. And GBP INR is an interesting chart because it really looks nothing like any of the other charts that we are looking at. And this is basically a reflection of the multiple local issues that are there both in UK and in India, which make it a pretty unique, or not unique per se, but definitely a different chart to look at. So this big fall here was Tuss's disastrous, or her finance minister Quartnick's disastrous budget, which just cracked the pound's value and went down to almost 85 to a pound. And then once she resigned and things started to get better and the Bank of England did its thing, you had this recovery from 85 to 102, which is like fantastic. I mean, can you imagine, this is this, so this is, yeah, and for this to happen in one of, the G7 countries, a 20% move in currency, that's like quite ridiculous, right? A 20% move in the currency, and this is just over what? September to December, so 2 months. It's just fascinating how much can change. And now we are seeing this consolidation, now sort of a flag, you can call it, between 98 and 101, getting narrower and narrower and narrower. So let's say about 100 rupees to British pound. And then it'll be interesting to see what happens to this cross rate. I mean, in the sense that this is really a cross rate because you have USD INR on the one side, you have USD GBP on the other hand, and you're talking about the GBP INR. And like I said, many local issues on both these economies that are going to determine how this goes forward. So if, like I said earlier, if the British government and the British approach is to sort of keep the pound weak, and at the same time, the Indian approach, or not, it's not, I don't know about the Indian approach, but for various economic reasons, the Indian rupee also remains weak. We may not really see this rate go anywhere significantly this way or that in the coming weeks and months. I mean, there could be a sort of compensation of both becoming weak simultaneously. Then the question is, which becomes weaker than the other? And then that will determine what this rate could be. So for now, those are, like, I think, too many complex issues to try and figure out in a short conversation. And well, market knows definitely better. So just let's leave it to the charts to tell us what this is going to be. So I don't have a particular view on the GBP INR, though I do have clear views on USD INR and the USD Euro, USD JPY. So yes, so that's on the Forex side of things. I have some three other uh, currency pairs that I wish to talk about, but I'll do this in a separate webinar because each of them reflects, real, in a sense, tragedies for the local economies. That's the Turkish Lira, which has just gone, crazy. If you just look at this in the last, let me just put the monthly chart actually, right? So how much the Turkish Lira, let's say from 2004 at 1.3 lira per dollar went to 18 liras per dollar in 23. Then you have the Egyptian pound, which went from 5 Egyptian pounds to a dollar to 30 Egyptian pounds to a dollar. And then you have the Pakistani rupee, which went from 61 rupees to a dollar to 260 rupees to a dollar. And this is ridiculous. And this is why I think, understanding currency is so important, to understand the impact that these sort of, why, first of all, these things happen, and then the impact of these things on the local economies and the real lives of just average human beings and lay people who really didn't have anything to contribute or do with this sort of massive devaluation of their countries' currencies, but they are the ones who end up paying the price. Yeah, in terms of extremely high inflation, in terms of extremely high prices for all sorts of things, economic growth stagnating or coming down significantly. And then it's just, well, as usual, the poor people and the middle class who end up really bearing the brunt of these things in not just financial, but in real life uh, choices and decisions, unemployment and chronic shortages, etc. So these three we will and more we will discuss in a separate webinar, more an educative idea, and to look at why these things are important and critical to know, and to if there is any way to protect oneself from these sort of scenarios should they happen in your home country or in the currency that you're mostly invested in. You never know. I mean, over a lifetime, any of these tragedies could happen and affect your entire life's outcome just because something happened at the macro level, which none of us can impact. But if we can prepare for it, if we can educate ourselves for it, then yes, there are things that one can do to protect one's financial security and future. So, inshallah, that at some other webinar. So this was the DXY. Like I said, looks like it's strengthening in the coming weeks and months. The USD INR stuck between 81, 82, and 83. So watch out for those levels. And the British pound bottomed out, looking at 0.8 to 0.83 as a zone, needs to break out on one side or the other. And the USD euro basically a mirror of the DXY. So there's really nothing more to discuss. As we do these webinars more frequently, we will definitely look at uh, going more in depth on the various parameters and issues, not just rates of what is happening, why it's happening, and what one should look out for and watch out for. All right. So great. So this is the Forex review. And with that, let's very quickly jump into the bullion side of things and the gold, silver. Uh, and then if we have the time, maybe some other things. Oh, well, we'll just do gold, silver today, right? So this is gold, uh, very close to its life highs. So we're looking at a chart of gold, which is all the way from 1834, right? So gold, after doing a life high in 2011, a good 11, 12 years back, did not see that life high again till 2020, 9 years later. And then now you're looking at this, remember, on the monthly chart, is doing this range bound business of being, so this is in dollars per ounce. So gold is in between this range of 1700 on the lower side, 1900 on the upper side per ounce. And this is from 2020. So 2.5 years range bound uh, pricing of gold in those 2.5 years. Lots of dramatic things have happened. Of course, partly COVID before that. And then you had the massive printing of money by all the governments across the world to just, stimulate the various economies. And we have, like I mentioned in some of the other market webinars earlier, we are also looking at perhaps being in a high inflationary era after 42 years of low inflation across the world. So those have been discussed in other webinars earlier. I will post the links of those other webinars earlier in the comments in the description section. You may want to have a look and get a more detailed perspective on that. And again, we will do a more detailed webinar just on that and the many factors affecting it in the coming weeks and months. So gold went from a low of 1600 in November 22 to a high of $1950 per ounce in February 23, and has then corrected to about 1840, right? Uh, Now, whether it is still within this broad range of, like I said, between 1700 and 1900, hard to say. It's come to its long-term moving averages of the 200 and the 100-day exponential moving average. There are many levels here to keep a watch out for. It's definitely at some of those levels. So you have one there which I just marked, which is at 1835. Multiple tops that have happened at 1835 levels from 2021, 22 onwards. Another level to probably look out for is somewhere there. Yeah, all right, which is at 1775. So at some very interesting levels to keep a track and see if it takes a bounce from there. As you can see on this, it did bounce off from the 100-day exponential moving average. Nothing convincing, but yes, there is some support that is happening there. Uh, a range bound situation, little iffy to predict what the outcome is. I think it'll stay in this range for some more time, and then we'll just have to wait for a decisive breakdown or breakout below 1710, below 1650, or a clear breakout above 1950, 2000 levels. Like I've said in the other webinars, if we stay in a persistently high inflation era now, globally, which is likely to be the case at least for the next 1 to 2 years, one year for sure, maybe even the next year or 2024, then there's a good chance that there's the higher probability that gold is likely to go up rather than likely to go down. So any of the gold aficionados there looking to get into gold, probably good time to accumulate it as it goes lower and lower if it does, right? And then wait for a breakout of $2,000 per ounce. And if it does that, then 2200, 2500 could easily happen. But it needs to deal with these levels that we mentioned just now before we have a clearer picture. And of course, we'll keep reviewing this in the weeks ahead. Looking at silver, right? So silver doing something quite dramatically different. Um, that it is nowhere close to its life high, which happened in 2011, right? It had its earlier life high in 1980, right? So let me mark that. Somehow forgot to mark it. Okay, so that was the previous life high in 1980. Or $41 an ounce came down to almost $3.50. I mean, can you believe that? I mean, if somebody told you precious metals can lose 90% of their price, most of us would have laughed off. And therefore, just coming down back to the multiple myths and what do you say? Um, mm, Misinformation which is there in the public that you can't lose money in bullion. I mean, come on, this is from 40 to $3.40, let's say four. I mean, 90% of your price of silver just disappeared in about 10 years, didn't do anything much for another 10 years, and then only started to rise, and then made a new life of 49, has from 49 has come down to 15, and now it is at 21, right? So nowhere is it really looking like it's tracking gold. There are commentaries about how cheap silver is with respect to gold right now, and then a case being made that one should perhaps be accumulating silver more than accumulating gold, because in terms of price appreciation it could do dramatically better. Well, mm, something called the gold silver ratio, which something we will discuss in our future webinars to look at whether that can give us some more information on that. But yes, I mean, if one is um, for whatever reason, I mean, one of the the commonest reasons, there was like silver is cheaper. Yes, it is cheaper, dramatically cheaper than gold is. And if you feel that silver could outperform gold, we will do a more detailed webinar on that in the future. Then yeah, you might want to look at buying silver rather than buying gold. Gold, however, the reserve metal, the reserve currency for all the central bank. It's not, we don't have a reserve, but that's the safe harbor currency across the world. It's not really silver, Silver has many industrial uses, gold really not much. But in terms of simply the question of making profit or generating returns, then there can be a case that silver could do better than gold in the coming days and weeks. Having said that, uh, my personal choice, I think I'd look at gold first before looking at silver, right? Okay. In some future webinars, we will look at palladium and platinum. We'll just move on to energy now. So two things in energy, quickly the crude oil futures, NYMEX, right? And the uh, natural gas futures, right? So this crazy charts that you see, you're seeing the top left monthly, bottom left weekly, and on the right you're seeing the daily. These crazy negative. If you remember in 2020, crude oil went to a negative price, unheard of ever in the world, and we have therefore this very crazy situation. Of course, that didn't last very long. Recovered, and then you have crude going from a high of 147 now to 76, right? So quite interesting in terms of how well crude has done, especially after COVID, right? If you look at the weekly chart, let me just take that negative price out. Yeah. So after the COVID recovery, once the global economy started to open up, and of course you had the Russia Ukraine issue overlapping that, you had crude going from 40 to $120 a barrel, and oil exporting countries made bumper billions, if not trillions, then definitely hundreds of billions of dollars of most welcomed profits, and now looking to uh, see what they want to do with all that bumper money that they made in the future. As you can see, crude also corrected back from 120 to 76. So this is after all the hullabulla around Ukraine and the Western Europe winter crisis, etc. All sort of calmed down, cooled off. We had an unusually warm winter also in Europe this year. So there wasn't that much need of energy in Europe for the winter as is normally the case. And that especially got reflected in natural gas, which we will see in a little while. So crude, more or less range bound now between 72 to $82 a barrel, not really doing anything much. Quite possible that it is going to stay here for the foreseeable future. If it does go down, maybe to 66 and all, but I don't think there's anything dramatic happening this year in crude. As far as what I can make out, the Germany especially has effectively transitioned from having any dependence on Russian energy imports to getting it from the rest of the world, from Western Africa to other sources. Um, so that threat of an energy shock price in the global markets is now essentially over, and with winter also over, there's really nothing major that I see coming ahead. The only thing that could be there is some sort of a dramatic escalation in the Russia Ukraine issue, or do America and China, have some sort of a conflagration and some sort of a tension, both of which seem to be, I think, in my opinion, diminishing those risks. So on the global energy side, there's probably not that much of a geopolitical risk that as there was in the weeks and months earlier. Like I said, natural gas, you can see this dramatic cooling off in natural gas prices, almost $10, right, to $2.32, right? I'm sure all of us had come across all this news about how expensive energy was becoming in Western Europe, how households were unable to keep their houses warm, that governments were doing all sorts of things to diminish or subsidize the monthly energy bills, electricity, and or gas, heating gas for keeping the house warm. But looks like that's more or less not so necessary right now, with natural gas effectively having fallen 80% in what, less than, yeah, August 22 to now. So September, October, November, December, Jan. So in 5 months, we've seen this dramatic fall in natural gas. And does not look to me like the fall is over. I think there might be one more small leg of the fall left. It might go down maybe even to 210 or even $2. I think this is, I'm not sure on what the unit is, but yes. And then we will see whether there is some sort of base that it forms, and then it settles down maybe around 3 or 4 or something like that. But effectively not very far from the bottom, I think. Maybe a further 10% fall, 5 or 10% fall at best, and then natural gas could start recovering back to the 250 and $3 level. But this big cool off in natural gas over the last many months has been a huge relief for the Western economies. Of course, not so good for countries like Qatar and other natural gas exporting countries. Is really not worked out great in terms of how that has panned out. So on the one hand, as we all know, I mean, what's good for one person can turn out to be bad for another. So a lot of the money that Qatar gets is from LNG exports, and with that substantially, at a cheaper price. Of course, I'm not fully aware of the things like long-term contracts and 10, 5, 10, 20-year contracts, and things like Germany having got into long-term deals with Qatar, etc. But yeah, these are interesting long-term scenarios to keep in mind. So while on the great for consumers, may not be great for a country like Qatar, which has had bumper profits from the sale of expensive LNG. And if this price stays persistently low, then, well, the long-term health of the Qatari economy is definitely something to keep in mind about. For traders and investors, for traders especially, well, yes, I think natural gas bottom could be looked at in the next 5-10% below price. And then a long position on natural gas could be looked upon to take as if not anything else, just as a bounce, which could be a 10, 15, 20% bounce at the very least. And then there are obviously positions that you can take in gold and in the DXY and the USD INR and other currencies, right? Okay, so with that, coming to the end of today's webinar, thank you very much for participating. Thank you very much for listening. Like I said, if there are any inputs, feedbacks, or any ideas on collaboration, most welcome to send them across, and would definitely look forward to any of that, and we'll get back as soon as possible. Coming up in the next few days will definitely be an agri and metals review on the global market review. And then we also do crypto reviews and the India market reviews. And we'll also at some point start reviews focused on the GCC, the Gulf Cooperation Council, stock markets, and look at how things, look at various opportunities which could pan out in those places. So keep in touch. And if you'd like to receive any updates, do send us a ping on any of these contact information that you see on the screen, so that we can send you an update and just a ping that's saying, look, we've got this next webinar ready. You can also, these webinars will also be posted on our YouTube channel. Nothing great in terms of design and all, but have a look at it for the serious guys. Just look for Bangalore Investors Club on YouTube and you will find us there. and you can perhaps subscribe to receive updates about all the webinars that will get uploaded and posted there in the weeks and months ahead. So thank you once again. Looking forward to your input, and I will see you in the next webinar. Have a great weekend. Goodbye and happy profits.